Good morning, everybody. This is Michael coming to you from GammaEdge on Tuesday, October 22nd with our pre-market morning strategy and briefing session. We'll go ahead and jump right into it. Obviously, three pillars here at GammaEdge we continue to cover is sentiment, structure, and trend. We'd like to start with the trend. In the market trend model, ARCX now is below the colored ribbon. We see the bolded white CT and the moving average is sloping down. As you can see, state change day over day. And we have, negative tick-tag combos. Heading into this morning, TC3 is off, so we will not be entering any P2P trades. So we'll continue to monitor this. Obviously, the red is above cyan, but if the bolded CT and the moving averages continue to stay below the colored ribbon, we will ultimately get a ribbon flip back to the downside. And since it's so close together and compressed, really one day could cause that ribbon flip to the downside. So we really, if we're looking for price appreciation through the market trend model, we want to see this recover pretty quickly today or within the next day, so we can continue the bullish trend to the upside. Really a pretty decent failure yesterday right at the open. So if you were looking to go long, this was a indication really early on in the day that any long trades were probably not going to be profitable and really struggle to move up. So we'll continue to watch that. SPX full complex, we're call dominated above and below spot price still. So the one of the pillars structure continues to hold, and sentiment also. Transitions very narrow, so unambiguous today. 58.45. We see the DEX-GEX transition outlined here. 58.35, depending on where we open. We'll look at that in a minute. PGEX there is at 58.35, and then PGEX 5900, INGEX 58.35. We continue to see COI up there at 5,900. So call dominated, not really a significant shift in the overall structure day over day in the full complex as of now. The delta balance for the SPX continues to be strong. We see today right-hand plane weak bear, understanding that's OTM call speculation is waning a little bit as you can view through the colored lines here. Right-hand plane net delta, just right at zero or just below zero there. But the left-hand plane in the money call is still holding up really well. That gives us a delta balance there of 1. So again, and on out through the week, we do not see any positioning for a significant downside move. As you see, Wednesday, Thursday, Friday are all strong bull, and then actually Monday turns to right-hand plane, left-hand plane, even more bullish than what we continue to see. Strong bull there. So really, again, as I state, not really any positioning for a significant market pullback with the overall price structure pulling back. SPY, we continue to assume or look at this as the SPY is being used as a hedging instrument to the SPX, but we do see a state change for today for SPY. Obviously, strong bull heading into today, right-hand plane, left-hand plane. So we'll continue to monitor this throughout the day. We do see Thursday is a little bit weaker in SPY, but then surrounded by Wednesday and Friday that continue to be bullish. So again, not really positioning for a significant pullback in the SPY at the moment either. GEX ratio, or sorry, delta balance history, SPX. Okay, we went over that one. Yep, delta balance chart for SPX, we went over that with the waterfall chart. GEX ratio for SPX, this is what we talked about yesterday. We continue to see the GEX ratio fall, numerator denominator, calls on top, puts on bottom. Just continue to see that right-hand plane OTM speculation start to decrease, which allows that obviously GEX ratio or ratio to decrease without necessarily that overall spot price moving significantly down. So we're just continuing to get a reset with spot price going sideways. Now, will this morph into a move down in the price with the GEX ratio? That will continue to be determined. But as of now, it's just a pullback and a reset of the GEX ratio with a price consolidation sideways. Same thing for the spiders here. We did see the drop in the overall GEX ratio there pretty quickly and significantly, but then recover here as price really just kind of went sideways and pulled back still. So we'll continue to watch this day over day also. Net stack command for today, 57.60 left-hand plane strike in the money calls. Obviously, that's below that 5,800 that we're watching, and then in the money puts above. So again, we have this what we call locked horns, where it'll be difficult to move above because of in the money puts above us, but we have significant in the money calls below us. You see the net charm OTM calls are winning here in the right-hand plane. So these will continue to grow and cause that weight overhead for us, which will be difficult to move up. And you see the right-hand plane strike there at 58.75. Obviously, we're above that. Or below that here at the open, so we'll continue to watch that. 58.50 to the upside is going to be extremely important. I think 58.40 here on the net charm OTM puts, so we'll watch those two levels as we head into the open. SPX full complex, GEX ratios. This is just a nice chart that Taylor's been putting together. We went over this on open mic on Sunday. Encourage everybody to look at the basically dashboard spreadsheet. It really just gives you a quick overview, one glance shot of the changes in transitions with color coding day over day. So you can look at that and make your SPX game plan or game plans for the day just by looking at this. SPXP heading into day 0 DTE, we've outlined the drunken sailor range 58.40 to 58.60. Below 58.35, you see this call OI here. It is basically non-existent, or not non-existent, but very low exposure here. So we could push price pretty quickly below 58.35 down towards this 5800. And then below 5800, obviously 57.75, kind of where we've already discussed on the net stack command, where those in the money calls are sitting. So we'll continue to watch this. I believe 5800, at least from my observation, is probably a level that would provide a significant amount of demand as we pull down into that level. Again, if we get below 5800, I'll probably change my stance a little bit more, looking for the market to hold that level to the upside. Getting above 58.50 is going to be important, and then we see 58.75 up there. But remembering we have those that locked horns, ITM, OTM look that will be significant for spot price to continue to move up, unless we see the vol-m command. We see those centroids in a positive slope, and we see a significant amount of volume targeting those centroids to the upside. Again, SPX 0 DTE, you can see the change day over day, drunken sailor range here, and you can just get a quick glance with this kind of new dashboard. +1 DTE, we see 225,000 OI, so pretty significant heading in to tomorrow. Call dominated. We see the range here, 58.25, 5800, and then still we see PGEX at 5900. So call dominated above and below spot price, very narrow transition. You see that 58.50 come in again. So staying above or getting above 58.50 obviously is going to be important for price appreciation, at least for the rest of the week. A retest of that from below and a failure could be an opportunity to short, depending on what the MTM looks like. And then a holding of 5800, obviously the MTM would have to have a significant change for a move back to the upside. So we'll continue to watch that. So if thens for today, we'll hit the SPX. All right, if thens for today, we see 58.40 for drunken sailor range for the bottom, 58.60 for the top. Excuse me, 58.50 is going to be extremely important to get above and hold. If we see a retest from below and failure, that may be an opportunity to short. Yesterday, we dropped below the drunken sailor range for just a little bit, and then we recovered pretty quickly, and then kind of went sideways around 58.50. So we'll continue to watch to see how we open. Looks like 58.25 at the moment, barring any major news. So I'll be watching this previous day low here at 58.25. It's going to be extremely important. If we get a failure there, I'd anticipate a retest of a test of 5800. Maybe just a quick move at the open into 10:30, 11-ish, and then we'll see what happens. Again, if we move up towards 58.50 or the bottom of the drunken sailor range and fail, I would anticipate us to be able to short this back down if MTM maintains. But we'll just have to watch the open and see how price action acts or reacts. So what we're seeing also is some sort of divergence with the overall structure. The overall structure in the MTM. And the MTM market model obviously is continuing down, but we're not seeing that significant positioning in the delta balance. And we always get questions about this. which one is going to be able to resolve. And so basically what I would say is we continue to watch the tools. We'd be non-bias. MTM, if you're a short-term trader, instantaneous CT and moving averages, obviously I'd be cautious. We may continue to see the market continue to pull down. Oh, Taylor said he was wrong on the Delta Stack command, or on the Drunken Sailor range. Okay, we'll look at that and change that. But we continue to see that that the overall delta balance is not positioning for a significant move lower in the market at this time, right? So we'll continue to watch that. We'll see which one is going to win out. But as long as the structure and sentiment are maintained, call dominated, we see, as I talked about this morning, the Mag 7 stocks, the liquidity stocks. That's where I ran that call dom del true. If we continue to see those hold up, structure and sentiment hold up on those and not change, it's going to be very difficult for the overall market to move down. So make sure that becomes a key component of what you're looking at for your SPX game plan with all the other content we have available here. But you have to outlay this and take it in chunks and sections and look at the overall mosaic and not just look at the MTM and say, oh my gosh, the MTM is down, it's bearish, I'm going to short the market. But as you saw yesterday, you had an opportunistic short, but then it recovered pretty quickly because Nvidia was making a new all-time high, Apple was holding up well, AMD was holding up well. All the heavier weighted constituents, which is why we use the true command, were holding up really well. So unless those continue to sell off or we see a structure change to those from delta balance and put dominated, it is going to be difficult for the market to have a significant move down. Now I say significant as in you might be saying 5 to 7%. An overall 0.5%, 1%, 3% pullback is well within the realm of possibilities just for a normal ebb and flow of the market. Well, I guess what I'm saying is like a significant, move from 5,800 to 5,700. Now, if we see that start to change in the delta balance and the sentiment and structure of these, heavily weighted stocks, then I will personally change my thesis and we'll probably look for a little bit larger pullback. But we'll also start to see that in the delta balance of the SPX, right? The market participants are not positioning for a significant market pullback yet, and that can change in a day, and we'll know that and we'll watch that. But as of now, this is just an overall pullback within an uptrend, and we hold above 5,800. We stay call dominated, MTM resets, GEX ratio resets, and then we have an opportunity to move up. So that's how I'm looking at it right now. Again, could change day over day. You don't want to get locked into a bias or locked into a corner. So make sure you continue to watch those tools, and we'll continue to discuss it here at GammaEdge. So that's all I have for this morning. I'll be in the Discord in just a few minutes. Hopefully that helps, and we'll see you in a minute. Thanks, everybody.